Good afternoon from Germany. This is Pascal speaking again. Second live stream today, pre-market. We are opening in about 4 minutes. And we have major economic news today. And we have a Federal Reserve meeting interest rate decision today. We have Meta earnings aftermarket. We have a trading day full of news. So it will be interesting to trade and to see what happens today. So let's start right away with Nasdaq again. We are still trading sideways here pre-market. We had some news at 8:15 pre-market. We saw a rise because of a lower than expected number here. Let's just go to our economic calendar. ADP non-farm employment change came in lower than expected at 106k instead of 178k. But the market doesn't want to rise right now, so maybe we have to wait for the next news in about 30 minutes. ISM manufacturing, PMI and JOLTs job openings. So more from the job market. More important will be this week Friday for the job market with non-farm payrolls 1 hour before the market open. But today we can maybe see what to expect from the Friday numbers. More important today will be, of course, FOMC statement. I already announced that I will live stream the first 15 minutes. Unfortunately, I cannot live stream the press conference. I think this one will be more important today because with FOMC statement and the interest rate decision, we will probably see a 25 basis points rate hike. We see right now a 98.4% probability for a 25 basis points move from 4.5% up to 4.75%. This will be not really important because everyone is expecting it. It should be already priced in the market, but more important will be what Jerome Powell is saying about future interest rate hikes or maybe lowerings. And this will be more important than the questions of the journalists at the press conference. What else do we have here? I just brought up a tweet from Michael J. Barry, maybe you know it from the famous film, The Big Short, and he was just posting sell. Yeah, he was already short in mid of last year, saying that he is only holding one jail stock, and so a contractor who is managing jails, but no other stocks because he thinks the market is too high, and probably he's thinking that we are again too high and just posted sell. And then inverse the Cramer ETF. He's just posting funny things because Jim Cramer often is on the wrong side, and yesterday, you see January 31st, yesterday, Jim Cramer says we are in a bull market, so buy on the dip. So just two opinions, everyone can be wrong or right. Let's see who is right today, and if it's a sell or if it's a buy on FOMC interest rate decision today. Okay, back to the market, 1 minute until the opening. And Euro USD is still pushing higher, 0.4% right now. So weakening of the dollar, more stronger euro is normally indicating a stronger stock market. That is what I want to see for entering new short positions. We talked about it. And I want to have higher price levels here on Nasdaq. There's the opening. And I want to have levels around 12,200 points, or maybe we can retest at the 12,300 points level. There I want to enter some shorts. So I will redraw the resistance area. This is the resistance area beginning at 12,260 points. In this area I want to open some shorts. Maybe we can manage to go there on the interest rate decision at 2 p.m. Eastern time today. I want to take on new shorts and then write it down minimum to this level, 11,750, and second and main target would be 11,550 points, right above these 50% Fibonacci level of 11,530 points in Nasdaq future. Yeah, what else do we have? We have yeah, let's talk about sugar. We didn't talk about sugar in my previous stream. So sugar is pushing higher, or was pushing higher yesterday, made new highs today. So we pushed above previous high point here in a strong uptrending rally here. This was a move of 15% to the upside. So let's see where we find a high point. Maybe this can indicate a new high, and then from there downtrend again, because now on February 1st today we are entering seasonal short territory. This means normally the sugar prices should go back to south seasonally, but yeah, it's just a seasonal trend. Doesn't have to say that it's every time like this, but I'm still waiting here. I was pushed out of my previous early short with only one contract, and I'm still waiting for more signals to the short side. I will wait, rather trade FOMC interest rate decision today than sugar prices, but I will have it on my watch list here to see if I can short it here in the next days. We already talked about natural gas prices, made a new low here at the $2.57. Let's see how soon we can go to higher levels and go back above the parabolic SAR here. So for now we are still below it and below the 9 EMA level, but let's see how far or how soon we can go back to the $3 area and see a smaller rejection to the upside here for natural gas. No trades right now, just on my watch list. We didn't talk about Intel. Intel had last week earnings, and a bad earnings surprise, went lower more than 10% here. I entered a short put trade after the earnings, on the day after the earnings, and you see this huge drop in implied volatility, and I traded this with an option. I sold a 24 strike put here on a live stream, and you see the stock is now trading sideways here. It gained a little bit from the lows, now 3.8%, not bad for Intel, but the more important thing is implied volatility crushed here, and it's now trading sideways. So every day passing by and nothing happening with the stock or implied volatility, I still make money because of theta decay, and this position is in the green. Let me look, 37% right now. So the stock just pulled from the lows, and I entered not at the low point, I entered above $27, so when the stock was above $27, but the stock went 3.8% higher from the lows, and my option position is in the green, 38%. So you see the big difference, and yeah, the expiry is in 44 days, so still some time left, of course, but I still make money every time nothing happening here, and that's why I like selling options and trading options, because I still have room down to the $24 level where the strike price is. Yeah, so still running this trade here on Intel, but it's only a really small trade for my portfolio, only $200, so almost nothing. And yeah, back to Tesla here. Tesla now pulling back again from the high point pre-market of $176. What I want to see is a pushback minimum to $150 here, the 50% Fibonacci level, and better here to the previous low point at $138. This would be an interesting level for me to cover my short. So still some room to the downside of about 19 to 20%. Yeah, let's see how far we can go. I entered at $178, my short position, so I'm a little bit in the green, but I am expecting more to come. Let's see, it depends on the market overall, with FOMC interest rate decision today, the press conference, and of course the earnings of tech stocks today after hours. We will have Meta Platforms 5 minutes after the close at 4:05 p.m. and more important, tomorrow on Thursday after market close, we will have the big ones: Apple, Amazon, Google. So these will be important because they have heavy weight in S&P 500 and in Nasdaq, and therefore these earnings will move the market. Yes, so that's for the news side. Now let's see your questions again. I think someone wanted to see the 2-year curve. So I will just bring up the 2-year interest curve. Where do I have it? Yeah, here, US Treasury bond. So normally, where's my chart? Here. Okay. Normally I have better charts here, but here it is. So here we see the interest rate curve. So for 1 month, 3 months, 6 months, 1 year, 2 year, and you see here now it's in backwardation. So it's in contango for the next 6 months. So that's why we expect the interest rate high at about 5% in the next 2 or 3 months, because we talked about it here with the FedWatch tool in my previous live stream today with the probabilities. You see the next Federal Reserve meeting on March 22nd. We see the high point, the expected high point at 5%. So this would be in the next 3 to 6 months, the high point at 4.8%, or 5% from central bank. And then you see a pullback. So this is what the market is expecting right now, that we see lower interest rate levels in the next 1, 2, and 3 years. And over 5 years, we see 3.6%. Over 10 years, 3.5%. Then on 20 year, again, higher interest rate levels. So this is normal that we see contango, so higher interest rates on longer time frames. But now it's in backwardation here, the yield curve. And this is never a good sign, because if we are in backwardation and we see a recession, then it's not a good sign here, and this should cause the market to pull back. But let's see what happens here this time. For now, January was really strong, 10% plus in Nasdaq, but you can see here it's pulling back, and the backwardation is getting stronger. So if we go back by 1 month maybe, so let's see December 1st, and you can see the difference. Is the difference here? No, we have to move here. No, doesn't work. Why not? Here. Okay, back to February 1st. All the same. I want to move to this date here. Come on. October 1st. Not working today. We don't know why, but normally you can see the difference here in the interest rate projections. And yeah, the backwardation went worse, and therefore I think we will have a worse than expected recession, and this is not priced in right now. The earnings were good so far. I think it was 67-68% better than expected, and the rest was worse than expected. But normally we see about 70-75% better than expected. So the earnings right now are a little bit worse than expected, but not too much. But more important will be tomorrow, big tech earnings and the outlook. The outlook is more important than the earnings itself. So if they beat the earnings estimate and the revenue estimate, we don't care. We care about the outlook and the telephone conference after the earnings here. So back to your questions. Thoughts on Google, especially before earnings tomorrow. Yeah, it will be difficult. So we will have a short outlook after the close today with Meta, because Meta also is relying on, after market close today, because Meta also needs the income from ad spending. They make about 85-90% of their revenue from ad spending, like Google, and therefore it will be important how Meta performs today for Google tomorrow. So if you see good earnings for Meta, then probably Google will rise also, and if you see bad earnings and a bad outlook for Meta, then probably Google will drop too. So this can be important, and we have already seen Snapchat, and Snapchat was a lot worse than expected, so it dropped more than 10%. Yes, it was yesterday. So you see here the earnings of 14 cents per share and revenue of 1.3 billion, and the estimate was 10 cents per share and revenue of 1.3 billion. So not too bad, but the outlook was really bad, and therefore the stock dropped or tanked. I can just bring up the chart here for you. Snap, and then we will have a look at the news in about 4 minutes. Loading. Yeah, here it is, and you see the stock tanked 13% right now, back to the $10 area. Implied volatility went down, of course, so the market already expected a 10% move here, and this is what happened. So the stock went back to the $10 price level, but it's still uptrending right now. But yeah, it's not a good sign for Meta as well. Let's see how their earnings come out. So maybe we'll see a beat as well in terms of earnings per share and revenue, but maybe as well a bad outlook for the next quarter or the whole year, and this can cause the stock to tank again, like Snapchat already did. Is there a specific delta you prefer? For instance, I prefer 0.2 when selling options. Yes, I normally sell options at the first standard deviation. So this is delta 16 or 0.16. This is first standard deviation. So if I go back to, do I have Intel here? No, here. So I can show you the first standard deviation. I normally take 45 days until expiry, so March expiry, the standard expiry, the monthly expiry on the third Friday of a month. And then I go to the first standard deviation. You see here in dark blue and lighter blue and then gray. So the first standard deviation is here, second standard deviation is here, and the third standard deviation is here. So this is, as you can see, delta 16. This is the level I normally choose. 0.16 times 100, because one options contract includes 100 options. Therefore, you can multiply this delta by 100, and then the 0.16 or minus 0.16 is the delta 16. And this is where I sell normally my options, because there is a sweet spot of how much premium you can collect, how much time decay you have here, seller decay, and yeah, how fast the option price moves when the stock is moving. So I like to sell at the first standard deviation delta 16. And this is what I did last week. You can rewatch my stream when I sold the 24 strike. So now this is a delta 10. It was a delta 16 when I sold it for 38 cents, and now it went down to 20 cents. So you see, I made some money. I didn't close the position. It is still open. I want to collect minimum 50%, but my main target will be 80% of the premium. And when the price is at 8 cents, I will buy back this option and close this position. That's it for Intel. Back to Nasdaq here. So still trading sideways. Everyone is waiting for the news in about 1 minute. We went down a little bit, now trading below moving averages. We go on a 1 minute time frame. 15 seconds for the news. Back to the news, here are the news. And let's see what happens here. Today, manufacturing PMI is a little bit higher than the forecast, but only 0.1 point, 46.9 instead of 46.8. So almost no change here. It's only a 2-star event, not too important here. So more important will be in about 15 minutes. ISM manufacturing PMI and JOLTs job openings. This will bring more movement into the market. So we have seen that the strong job market is a little bit weaker now than expected. Here ADP non-farm employment change is not negative, but it's a little bit lower than the forecast. Let's see if JOLTs job openings is showing the same. And of course, Friday number will be more important with non-farm payrolls here on Friday, 1 hour before the market opens. So we only have an outlook today with JOLTs job openings and ADP non-farm employment change for the Friday numbers, which will be more important than the numbers today. But like always, these 3-star events can act as catalysts, and therefore I'm looking at these dates just to be sure not to be in a wrong position or caught in a wrong position when the market is moving. I'm not trading the outcome of the news or not expecting anything. I'm just using the time when the news are out as a catalyst for the prices here to move to the up or down side. And like we discussed in my previous live stream today, I'm waiting for higher price levels to come today, maybe around the 12,200 points or higher area, to take on new shorts. Here you see on a 15-minute time frame that the parabolic SAR is already moving to the upside, indicating a downtrend. Doesn't have to say anything because you see there are a lot of changes here on a 15-minute time frame. So we can still push higher with the news in 15 minutes. But yeah, we are still above the moving averages on an hourly time frame. And even on an hourly time frame, it's in a short trend already with the parabolic SAR. But here, ADX is still signaling an uptrend since yesterday. Here, right before the opening, we had the crossing above the moving averages, above parabolic SAR, and the crossing here on ADX. So this was a really good sign for taking on long trades intraday yesterday. Crossing of parabolic SAR, crossing above the moving averages, crossing here above Fibonacci level. So this is a really good sign here right before the market opened, 1.5 hour before the market opened. And you can use these signs if you see on multiple indicators. I wouldn't just take one, not only parabolic SAR, not only ADX, but if you see, like here, on 3 indicators closing above moving averages, closing above the Fibonacci level, and parabolic SAR and ADX, so you have a lot of signs showing that it is bullish. And you have seasonality on January 31st. Normally, in 90% of the time, it is bullish, and therefore, yeah, it would just be nice to trade it to the long side as a day trade. But I'm not a day trader, therefore I didn't trade it. But there were a lot of signs to take on a long trade yesterday. I'm curious today where will be the high point, and if I manage to go in with more shorts here. If not, I don't mind. I already have a short position and I can ride it to the downside and take some profits. I want to take on more shorts if we move below the previous lows here, but therefore I want to push below the lows of yesterday, so below 11,870 points. So still 250 points to go, but when we go below this level, I want to take on more shorts here on Nasdaq. What else? Back to ES for S&P 500. So this is a really important level, because if I scroll out and zoom out a little bit, you will see how important this current area is. Just going out a little bit further, and then you see, so previous high point was here on September 13th, where we had a CPI report. Then we had the high point here on December 13th. And we have still some room to these high points. So from current level to the high points, we still have room of about 2%. But it is a really important one here, because you see how often we failed at the for a breakout at this area here. The last time was last Friday. We couldn't manage to go higher and went back immediately. Then yesterday we closed right at this important resistance area, and today we are trying again to push through. Let's see if we can manage with Federal Reserve interest rate decision or the press conference to set a level and close above, or if we see a pullback again, and maybe if it's a stronger pullback, a close below parabolic SAR, so indicating a change of direction here. Then still waiting for ADX for a change of direction. But yeah, it would be interesting to see a close below this parabolic SAR dot moving right here at the, or sitting right here at the 9-day EMA level at 4,050 points of ES future. But this level is important. You see, several times we struggled to break out at this level, and when we made a higher highs, we went back right away after 1 or 2 days, and therefore this is an important resistance area here where we are right now. But I normally trade Nasdaq because there's more movement with Nasdaq 100 than with S&P 500, and therefore Nasdaq is more interesting for me than S&P 500. But maybe some of you are trading SPY, so the ETF on the S&P 500. Therefore look at the ES here for the important levels. It is a significant level where we are right now. Crude oil, we already talked about this. Still no chance here to move above this resistance area. Maybe we'll see a retest later, and when we manage one day to break above this $83 area, then we will probably see a rally back to the $90 level. So there's more upside potential to come, about 8% when we close one day above this $83 area, but I don't see it right now, especially when the markets are pulling back. Then probably crude oil prices should also go lower. Sugar, we talked about this already, pulling back further, but I will wait for tomorrow or the day after tomorrow to see a clear high point and a clear pullback here, maybe below the previous high point here. And yeah, I won't step in an early short trade because I already failed the last 2 times. It's always difficult if you want to trade early and to catch a high point, because you never know where the next high point will be. Therefore I will wait for a new short in sugar. Yeah, cotton is also interesting if someone of you is looking for cotton. We are in a sideways trading phase right here. You see the uptrend here. So next important level is the 0.990 area. As soon as we close above this, then we have more upside potential here. You see we were in a downtrend here from high points of what was it, 120. So there's a lot of room to the next high points. Here, draw it. 32% upside potential if we manage to close above 0.90, but we are still trading sideways, so it's just on my watch list and I have no trade so far in cotton. If you have some stocks you want me to analyze, just write them in the chat, and if you have problems to write or to ask a question in the chat, then please subscribe to my channel. You have to be a subscriber for at least 1 minute, and then you should be able to write in the chat. And if you are still not able to write, then you have to create a YouTube channel, because for commenting you need to have a YouTube profile, and then you are able to write a comment. Amazon, yes, of course. Let's look at Amazon because they have earnings tomorrow. So I will bring up Amazon. Yeah, Amazon stock. The big ones, yeah, moving higher like all the other tech stocks together with Nasdaq. But you see we are at the previous high point now here. So this will be also an important resistance area. Previous high point was at $103.79. High point today $103.71. So already retested the previous highs. You also see here was a high point at the end of October 31st. So this is an important resistance area here. Let's see if the earnings can bring us above this area, or we will fail with a breakout here. Normally on a first attempt we are not able to go above. We should fail within this area, see a stronger resistance within here, and then pull back. Maybe here you see the previous level at $96.66. This was a previous high point 2 times here, and yeah, the 3rd time here we had an area where we were trading sideways. So this can be an important area between $96 and $97 for pullback. So I would rather trade a pullback here, 6.5 or 7% pullback from the current levels. But maybe we'll first see if they have a beat on earnings. Maybe we'll see something like with Microsoft. So beat on earnings and then move higher into the resistance area. And then on the press conference, on the earnings conference call, there will be the drop on a bad outlook. And maybe this will happen here with Amazon. I don't know. This would be a pretty huge move here, 6%, but nothing is impossible for Amazon. You see, sometimes they move they move heavy here. This last time they went 25% down here in October on the earnings. So everything is possible when the earnings are released. What delta you prefer if you want to buy an option call? Interesting question, Ron. Normally I don't buy options. It's only 5 to 7% of the time when I buy options. And I normally do spread trades, so I'm not buying naked. But when I buy, I normally consider buying 30 to 35 delta options with a time until expiry of about 60 to 80 days for not having a too high theta decay. Therefore 60 to 80 days until expiry with a 30 to 35 delta. I don't want to overpay. I don't want to go too near at the money because there you have the highest time value and I think you are overpaying. So rather going into the money, if you want to have less time value in your option, then go into the money, but you will have to pay more, a higher option premium. Therefore you have more risk if you lose and the stock is turning down when you buy a call. Therefore I would always buy out of the money, but 30 to 35 delta, or 0.3, 0.35 as delta, and 60 to 80 days until expiry. Like always, no investment advice from my side, only for entertainment purposes. Always do your own due diligence. I'm just telling you what I do. That doesn't mean that you should do the same. Back to the market. Nasdaq still trading a little bit higher now, but still trading sideways below the 12,200 points area. So let's see in 2 minutes the next news, and you see why you should always wait in the first 15-20 minutes, because we had a false direction like we often see, a break to the downside, then a pushback above moving averages here, and what I want to see is now higher highs to reach my short targets above the 12,200 points area. Idealistically 12,260 to 12,300 points here in Nasdaq. So let's see news today. ISM manufacturing PMI and JOLTs job openings in 1 minute. So we are at the tipping point now of the risk of inflation and higher interest rate hikes and recession risk. So now it can shift from this fear of too high inflation, because inflation is pulling back now. It's rising, it's still rising, but it's rising on a lower, not such a high level. And therefore we probably will see in the next weeks and months more fear of a recession. And when the job openings are lower than expected, then this can cause recession risk. Of course, this is what Jerome Powell wants. So everyone is now cheering and saying, yeah, perfect, no higher interest rates because the job market is cooling down. But in the end, this means that there's a higher risk of recession and the companies are laying off their staff. And this means, maybe a higher recession, higher than expected, deeper recession. And this can also cool off the stock prices. So here we see ISM manufacturing lower than expected. Job openings better than expected. Still strong job market. Interesting to see. So this is not what the Federal Reserve wants to see, but it's not indicating a recession risk right now. So higher than the previous number, higher than the forecast. Strong, not indicating a recession at all. This number is a little bit lower than the forecast, but nothing to worry about. But not really good. So 47.4 is still below 50, and therefore it's not a really good number, not showing a strong not really interesting. It's sometimes difficult to interpret what now to trade. To trade it long, to trade it short. Just from the numbers, you cannot say it's good or it's bad for the market overall. More important will be the FOMC statement and Federal Reserve interest rate decision at 2 p.m. Eastern Time. But I hope that we will take on this long, so for giving me a chance to enter more shorts. Yeah, it's looking good right now. Market is turning higher. And I hope that we can manage to go above the day highs here and see higher levels for me entering more shorts. Yeah, it's sometimes strange that the numbers are different. Like today, the ADP non-farm employment change is lower than expected, but JOLTs jobs openings are higher than expected. But the difference is, you see here, this is December and this is January. So it's a different month. And therefore the numbers can differ. And of course, the numbers are telling something different. But sometimes we see on the same day, like today, different job numbers pointing in different directions. And this can happen. And this can cause the market to go wild. The same today, maybe with Federal Reserve interest rate decision. It can come in with, like expected, with 25 basis points. So market can stay stable or just turn wild before the press conference. And on the press conference, just Jerome Powell saying one word. And everyone is interpreting it the wrong way or interpreting it just bad. And then the market can tumble. Let's see what happens. I'm always curious on the outcome of the FOMC meetings. It's always interesting to see what the market is doing. Even if we see all the projections here from the market, what is priced in. So now you see the market already turned here for November to 34.6% probability for lower interest rates. So this is sometimes shifting back for 25 or even 50 basis points lower from the high point of 5%. So we have seen this in the previous 2 or 3 weeks several times. So you see 31%, 33% is pretty near. So it can shift again to lower interest rate levels. Probably we will see a shift in the expectations today after the press conference. And if Jerome Powell is speaking really hawkish, then probably the interest rate levels will go higher at 5%, back to the 5% level. And then the market should turn down. Everything is possible here. Therefore, if you are a new trader and if you don't know what to do on an interest rate decision day, then don't be in a position at all. Just look at the market, learn from the movement, or just paper trade it. So I know it's always different if you don't have the real emotions, if you're not trading with real money, but sometimes it just helps to see a clearer picture here if you're not in a position or if you're not in a real money position. And then it's a lot easier to cut on losses, on paper money losses, or just trading with a stop loss and not feeling bad when you lost money. And therefore, all new traders don't go into a position before the outcome of the interest rate decision in the press conference, just to wait for tomorrow or the day after tomorrow for non-farm payrolls, and do not trade the news or into the news. It's difficult to see the outcome. Even I cannot predict the outcome. I can suggest something, but I don't know if it will happen. No one knows what will happen. Even if the market is expecting a 25 basis points move and it will come like this, the market can turn higher or lower. We don't know. Everything is possible. I've seen and have heard from many people that jobs are opened and listed but just don't get filled. I think our job numbers are going to get worse in the near future. Yes, Carlos, the problem is that a lot of companies have problems to fill their jobs. So they have a lot of open jobs, but not the people who can fill it. So this is a big issue right now. And there was even a question on in the last Federal Reserve press conference. One journalist was asking if Jerome Powell was willing to speak at the Congress to maybe to make a new law to attract more Mexicans or other immigrants to work in the US for all these open jobs. It's a big issue even here in Europe and in Germany. We have a low jobless claim number, but we have a lot of open jobs, and the companies are hiring and cannot find people for their jobs, and therefore they have to go higher with the wages, and this is also causing higher inflation. But at the same time, we see with the higher interest rate levels that the companies are cutting jobs. Why? Because they want to spend less money. So they try to find things where they can save money, and this is normally ad spending. So this is causing issues, of course, for Twitter, for Snapchat, for TikTok, for Meta, and for Google, and so on. Every company relying on ad spend will have problems first. So therefore, there's a big focus today on the Meta earnings and tomorrow on the Alphabet or Google earnings. Why? Because of ad spend. And ad spend is normally the first thing companies try to save money. The second thing is labor costs. So they are laying off people because they want to save their wages. But they know that it will be difficult to get these people back when the economy is gaining traction again. And we had the same thing 2 years ago during the COVID crisis in 2020, when the companies laid off a lot of staff and then wanted to get it back quick and they couldn't find them again or had to pay higher wages. And therefore now they are waiting. They are already struggling with the higher interest rates from the Federal Reserve, from the banks, and they have to pay higher interest rates for their debt burden. And this is especially a problem for the companies which have high debt burdens or which are not profitable at all. But of course, they're struggling because they think, are we laying off our staff now and then we need it back in 3 or 4 months and have to pay higher wages? Or are we just keeping them for these 3 or 4 months because we know that we will need them again in the second half of this year? And I think it just needs 1 or 2 more months until the company will take on a decision. So we have seen several layoffs in the previous 2 or 3 months from tech companies, because normally these companies are the first to set labor free. And then we will see other companies, and it will move on. So we just need some more weeks to see the reflection in the job numbers that the job market is weaker than expected. But for now, it's still showing strong numbers, and this is not what Jerome Powell is wanting, because he wants a cool off of the job market to have less stress on the wages, because this is also causing inflation. Yeah, let's see what happens here. So it's difficult. I don't want to be on a Federal Reserve board because it's a difficult decision how high you want to raise the interest rates. I think they are already too high right now, so I wouldn't go to the 5% level, but of course Jerome Powell has to speak hawkish and indicate that the Federal Reserve will do everything to bring inflation back to a 2% level, but it will take time. So they will not be at the 2% level before 2025. So they will need 2 more years to bring inflation back to 2% level. It's always easier to put money into the system and causing inflation instead of pulling it out again and bringing inflation back to the 2% target. And this is what takes time. And the same with the job market. The companies are sitting on their workers and they don't want to lay off because they know how difficult it is to get them back. And therefore it takes time. It's normally the last number in a recession. So at first we see the recession already, and then we see that companies are laying off jobs. We have a higher loan here. We retested previous lows. You see, this was previous low here, pre-market. And we have now higher lows. So if we are turning back up now, and see higher highs, this can cause a retest of day's high. Let's see if this happens. So now let's just draw a line at the low point here. This was also a low during the Asian session. So we had lower lows tonight. So if we break previous lows, on the next target point will be below 12,100. Here, around this area, the lows of the Asian session, 12,080, what was it? 12,085 points. But as long as we are trading above, making higher highs, we'll probably see here new highs. This is what I want to see. A struggling market, we see it's not easy for the market to make higher highs. This is good because it's in favor of my overall position, of my short position. But I want to see a pull to higher levels to short on more. Do you think with the rise in gas again will push the inflation back up? If it does, wouldn't that mean that the interest hikes would be heavy again? The problem is, and the Federal Reserve knows this, that they cannot cause the gas price to go lower with interest rate hikes, because gas is a commodity. So the interest rate decisions do not affect so much the commodity prices, because the commodity prices are driven by different economical factors on the whole world, especially crude oil and natural gas, which are also produced in other countries, not only in the US, and therefore the interest rate decision cannot have such a big effect on the commodity prices. It's more the economy overall. So if they can manage to cool down the economy and cause the economy having less demand for crude oil and natural gas, then this will drive down the prices, but not the interest rate decision itself. And therefore we have these two different inflation numbers with core CPI, non-core CPI, and PPI, because we have with core CPI and PPI, we do not have the gas prices, the electricity prices, and so on in the inflation number, because we know that they are not really affected by the interest rate decisions. Only indirect by the companies having less demand if there is a cool down of economy. So I don't think that even if the natural gas prices are going back up, I don't think they will go back to $10, and therefore even a pushback from the $2.50 area to the $3 or maybe $4 area will not cause a high inflation number right now. I don't think that this will happen. More problematic will be the wage growth. So if we still have a strong job market and problems with filling the open jobs, then this will cause higher wages, and higher wages will cause higher inflation, of course. So because companies will have higher costs, and these costs have to be added to the product prices, and then consumers will have to pay more for the products in the end, and then we will find a new balance. So if the consumers are able and ready to pay more, then this will cause an upward spiral. If they are not ready to pay more, then probably the companies will sell less and will have more layoffs again, because they won't need these workers. So we will find a new balance, but it takes time until the market is balanced overall. And now the previous 2 years, we had so high growth of money supply that everything was just growing. Now all the money is pulled back out of the market, and now we have the same thing to the downside. So we're over exaggerating, and now the same thing happens to the downside. And then we will see a balance again. But this can take 1 or 1.5 and 2 years until we are back at a 2% inflation level and the market is balanced overall with labor, with inflation, and so on. It takes time. It's like a giant tanker ship. So it takes time to turn and to make a 180-degree reverse. It's not so easy. It's not fast. Okay, market is trying to push here. Let's see another 5 minutes, and if we manage to go higher here, I will close out the live stream, because everything is going like expected right now. We are still in the sideways trading phase here, but if we manage to go higher, then this is good. And I want to see on the interest rate decision at 2 p.m. and I'm live streaming it, so we will see it together. Higher levels to be able to enter more shorts. If we reach my target 12,260 or higher before the interest rate decision, then I will take on shorts before the interest rate decision, because I don't think that it is really important when everyone is expecting the 25 basis points move. Then probably Jerome Powell will deliver this 25 basis points. Pushing back to the moving average. Still caught in the sideways trading. Everyone is waiting for the important news from the Federal Reserve. No one wants to buy too high or sell too low. That's just normal before the meeting. Difficult for day traders. These days are difficult for day traders just before the meeting. After the meeting, then we normally see clearly pattern with sometimes huge movements, 200, 300 points in Nasdaq, just normal. But before the meeting, it's difficult to trade here. And you now see it's not a clear trend, just going sideways, ADX. We are really near VWAP, you see. Purple line is VWAP. Trading right at VWAP now. At the moving averages. We can go back on a higher time frame and see what's happening on an hour chart. There shouldn't be a big difference. Just more sideways trading. Huge wicks on a downside, but still defending the 9 EMA level on an hourly time frame. ADX is still bullish, but parabolic SAR is already showing signs of weakness here. But as soon as we manage to close above, it will turn to an uptrend. This is what I want to see before FOMC interest rate decision, and then taking on short positions for the press conference. Hopefully Jerome Powell is delivering some hawkish words to bring down the markets again. If Powell announces 0.25, do you expect the market to rally up? Yeah, maybe. Why not? Because then the fear is out. Just the fear of the risk that no one was expecting of 50 basis points or 0 basis points. Because when the market delivers as priced in, then it's always something of, everything is like we expected, is happy. So VIX should go down and market should go up, maybe by 100, 150 points. Stock markets don't want surprises. They want to have a clear risk. And if everyone is expecting 25 basis points, then the 25 basis points should be delivered. Everything else would be a really big surprise. But the market can still rally. Maybe we have already done this rally in the previous days. But maybe we will see a retest of the 12,300 points level. I just think it's risky to trade to the upside today, because we don't have a lot of room to the upside. 150 points is not a lot of room for a swing trader. And therefore I like to go short at these levels. Even if I risk that the Jerome Powell is dovish and not hawkish at all, then the market can rally and can push through the 12,300 points on the upside. This can happen, but then I'm stopped out. So that happens. No one has a 100% hit rate. That's just normal to lose on some trades. But you always have to know when to enter and where to exit your positions. Still more sideways trading here. Not really interesting. Okay, looking. Next attempt here. If you do not manage to go higher, I will close. And then we will see for the FOMC interest rate decision. right 5 minutes before the meeting, I will go live again, like I did here before stock market open. So at 13:55, I will go live again, and then we will see if I already managed to enter my short position, or if we will see together a higher push on the interest rate decision and then being able to enter a short. Okay, that's for now. Hope you had a nice trading day so far. Let's meet again at 2 p.m. Eastern Time. See you later. Goodbye.